So here's the million-dollar question you've been asking yourself. Is there really such a thing as turning $10 into $100 overnight? Well, let's dive into the enigma of leverage and uncover what's really going on under the hood. Imagine you have $10 in your pocket. Now, picture this. The market is like a giant slot machine that can multiply your money by tenfold with just one trade. That's leverage in a nutshell. It sounds too good to be true, right? But how does it actually work? Here's where things get interesting. Leverage allows you to control more assets than you own outright. Think of it like borrowing power from the market itself. When you use leverage, you're essentially betting a fraction of your money, the margin, on a much larger sum. For instance, using 10x leverage means you can control $100 worth of assets with just that $10. And here's the surprising part. That extra power to control more assets comes at a price. When the market moves in your favor, the gains are magnified, but so too are the losses. So while it might sound like a get-rich-quick scheme, leverage can quickly turn into a lose-all-your-money nightmare. All right, now let's dive deeper and unlock the power of leverage. Think about it like this. Leverage is a magic wand that can turn a small stake into something much bigger. For instance, imagine you have $1 in your pocket, and you decide to use 10x leverage on Bitcoin. It's as if you're betting not just your $1, but $10. Now, let's make this even more concrete. Imagine you're at a fair playing a simple game where you can bet using magic tokens. Each token is worth $1, and the pot for each round is 9 times bigger than what you stake. If you put in 1 token, it's like suddenly having 10 tokens to play with. Now, let's say Bitcoin goes up by just 1%. In our example, that means your single token, a $1 stake, suddenly turns into 10 tokens, $10. This is exactly what leverage does for traders and investors. It multiplies the potential gains or losses of their trades. The more leverage you use, the bigger this multiplier effect becomes. But remember, with great power comes great risk. And here's the surprising part. This magic wand works both ways. Let's take that example one step further. Imagine you still have your $1 leverage bet on Bitcoin, but now the market goes down instead of up. If Bitcoin falls by just 1%, not only do you lose your initial $1, but it gets much worse. Your loss multiplies, turning into a $10 loss. Think about it this way. If you're betting on a coin toss and you bet with leverage, every heads is a double win, right? But what happens when the coin lands tails up? It's not just $1 down, it's $10 gone in an instant. That's why we say leverage is like holding that magic wand. If used wisely, it can multiply your gains exponentially, but if you're unlucky or prices move against you even slightly, it can turn those gains into massive losses. So remember, the power to make huge profits quickly comes with a warning label. It's a double-edged sword, just as sharp and dangerous on one side as the other. Imagine a game where every time you win, your score doubles, and every time you lose, it gets cut in half. You start with $100, and the rules are simple. On just one roll of the dice, you have to bet everything. That's what leverage can do. It can turn your entire stake into dust in seconds. Let's say you're playing this game, and you decide to go all in on a single roll. If it goes well, your $100 could balloon into thousands. But if it doesn't, you could lose not just some money, but everything you started with. And that's the real danger of leverage. It turns small bets into giant risks. Now, let's bring this back to the markets. When someone uses leverage in trading, they're essentially betting their entire stake on a single outcome. If prices move in your favor, you can make huge profits. But if they don't, you could end up with nothing. It's like that game of dice, only much more complex. And here's the surprising part. Many people who use leverage think it just means making bigger profits. They might start small but then get greedy and decide to keep betting everything, thinking if I lose, I'll just borrow more. But what happens when you actually do lose? You're not just losing your initial stake. You could be in a dangerous debt spiral that's hard to escape. So remember this. Leverage is like playing high-stakes poker with all the chips on one hand. It can make fortunes, but it can also destroy them overnight. That's why many market insiders are wary of leveraging too much. They know firsthand how quickly the game can turn against you. All right, so we've talked about leverage as a powerful tool that lets you bet big with just a little money. But there's another side to the story, one that not many people mention openly. let's dive into why leverage is like a high-speed car with no brakes. Imagine you're driving down the highway in a super fast sports car. It's exhilarating, accelerator to your foot, top down, wind in your hair. You can go really fast and cover a lot of ground quickly. But here's the thing. If something unexpected happens, like hitting a pothole or getting distracted for just 1 second, you could end up losing control and crash. Now, let's apply this to leverage. When you use high levels of leverage, it's like stepping on that gas pedal even harder. You can make huge profits quickly, but the risk is also massive. A small downer in the market, like a pothole in your car ride, can send everything crashing down. Take, for example, a trader who uses 10x leverage to bet on Bitcoin. If Bitcoin goes up by just 1%, they triple their money. But if it drops by 1%, they lose all of that profit and more, potentially losing the entire initial investment. That's why this is like driving without brakes. You can go really fast, but you have no way to stop safely. The danger here is not just financial loss. It's emotional too. When things are going well, you feel invincible. But when they turn, the panic and stress can be overwhelming. Many traders who use leverage find themselves in a position where they're not only losing money, but also their peace of mind. In summary, while leverage gives you the power to make big gains, it's also incredibly dangerous because you have no control over market volatility. Without the brakes on your financial car, one small mistake can lead to a huge crash. That's why many insiders would rather use conservative strategies and avoid the high stakes of leveraging too heavily. So, remember, leverage is like that high-speed car with no brakes. You need to be extra cautious before you hit the accelerator. All right, so we've talked about how leverage works, like borrowing money from a bank or margin account to amplify your trades. And we've explored why it can be dangerous, right? But the truth is, leverage isn't just about getting rich quick. It's a double-edged sword that can cut both ways. Imagine you're flying a plane. You know how when you tilt the wings of an airplane to turn left or right, it responds dramatically? That's kind of like leverage in trading. It can give you huge movements and quickly get you where you want to go, but with the same risk that if things go wrong, you could crash. Here's the thing. Leverage works on both ends. When times are good, your gains are magnified. But when things turn bad, your losses are magnified too. And sometimes, it can feel like you're playing a game where the stakes keep going up and up until you either win big or lose everything. Now, I want to say this clearly. Leverage isn't inherently bad. It's a tool, just like any other. But here's what insiders know that nobody talks about enough. Before you use leverage, make sure you understand these risks completely. You need to be prepared for the worst-case scenario, because if things go wrong, they could go very wrong. Think of it this way. Buying a house on leverage is different from just saving up for one. Sure, you might get rich quick by flipping properties, but what happens when the real estate market crashes? If you're leveraged, you could lose everything in a heartbeat. So, before you decide to use leverage, ask yourself, can I handle losing everything? In short, leverage isn't just about getting rich or going broke. It's about knowing your limits and preparing for all outcomes. That's the real insider's perspective.